Hey everyone, welcome back to Corporate Decoder, the place where we dive into the juicy details of corporate life and sometimes things get a little bit interesting. Today we're cracking open an 8K filing from IMAC Holdings Incorporated. And let me tell you, it's not exactly fireworks, but Therese a little something to unpack here about how they're managing their money. We were looking at a filing that came out on the 3rd of October 2025, but it's reporting on an event that happened back on the 26th of September. So buckle up because we're going to decode what this means for IMAC Holdings Incorporated. Remember, if you like getting these kinds of straight to the point breakdowns of financial documents, make sure you're subscribed. And hey, we've got a fantastic community over on Discord too, so come join us. The link is in the description below. Alright, so what we have here is a Form 8K, which is basically a report that companies have to file when something significant happens that the public should know about. Think of it as a corporate bulletin board posting. This report focuses on a couple of key things. First up, they're talking about entering into a material definitive agreement. Now, that sounds fancy, but really it just means they've signed some sort of important contract. And the real meat of this filing is in item 2.03, which is all about new debts or financial commitments. Basically, they're taking on a new financial obligation. So here is the deal. On the 26th of September, IMAC Holdings Incorporated, which we'll call the company, issued a promissory note. Think of a promissory note as an IOU. They borrowed money, and this note is their promise to pay it back. The interesting part here is the numbers. They issued a note for the principal amount of $296,800, but they only received $212,000 for it. That difference, over $84,000, is essentially a cost of borrowing, like an upfront fee or discount. It means they're paying a premium to get access to this cash. This note is also unsecured. That means the lender doesn't have anything specific they can grab if the company can't pay it back. This makes it riskier for the lender, and usually means a higher interest rate, or, as we saw, a discount on the principal for the borrower. The loan isn't a long-term one either. It's due on the 24th of December of the same year, 2025. So they have about 3 months to repay this. Good news for IMAC Holdings Incorporated is that they can pay back this loan early, anytime they want, without getting hit with any extra fees. This is a common feature, giving the company flexibility if they suddenly get a cash infusion. Like most loan agreements, this note has standard clauses. These are promises the company makes about its financial health and operations. It also lays out what counts as a default, meaning they've really messed up. If a default happens, like if the company goes bankrupt, the lender can demand all the money back immediately. This is pretty standard stuff for any loan agreement. The report mentions that the actual form of this promissory note is filed as an exhibit, and it was actually filed with a previous 8K on May 6, 2025. So, if you wanted to see the nitty-gritty of the legal language, you could go back and look at that filing. This filing itself doesn't contain a lot of deep financial tables like a 10Q or 10K would. Most of the action here is in the description of this specific loan transaction. Essentially, they've secured a relatively short-term loan with a significant upfront cost baked in. For context, IMAC Holdings Incorporated's common stock is traded on the OTC Markets Group, incorporated under the ticker symbol BACK. This isn't a major exchange, which often means the stock is held by a smaller group of investors and might be less liquid, meaning it's harder to buy or sell large amounts quickly without affecting the price. The company also indicates it is an emerging growth company. This designation allows them to take advantage of certain regulatory benefits, like extended timelines for complying with new accounting standards, which can sometimes mean less transparency for investors in the short term. So let's zoom out and think about what this all means. IMAC Holdings Incorporated took on a debt of almost $300,000, but they only got about $212,000 in cash. This suggests they might be in a pinch for cash, needing funds quickly and willing to pay a premium for it. The fact that it's unsecured and short-term means they're likely trying to bridge a temporary gap, rather than fund a long-term project. They're essentially paying over 36% extra upfront for this money. That is a very steep price for a loan, even for a short period. A key thing to watch here is their ability to repay this loan by the 24th of December. If they can't, it triggers default clauses, and that would be a serious problem. Given the cost of this loan, it signals that traditional lending might be difficult or expensive for them right now. Now, looking at this filing, it is not a treasure trove of financial statements. The main story here is a company taking on a debt at a premium, likely because they need cash relatively urgently. It's a sign of financial pressure, and we'd want to see their cash flow statements and balance sheets from other filings to understand if this is an isolated incident or part of a larger trend. This loan, while not enormous in the grand scheme of corporate finance, is quite significant for a company that is described as an emerging growth company. Taking on debt like this, especially with such a steep upfront cost, indicates a need for capital that might not be easily met through other means. Investors should be asking why the company couldn't get better terms or why they needed the money so quickly. My take on IMAC Holdings Incorporated based on this filing alone is that they are navigating some short-term financial challenges, necessitating quick access to funds. The cost of this borrowing is a red flag, suggesting a higher risk profile for this lender. It's a clear indicator that management is focused on securing operational liquidity, even at a premium. The biggest risk highlighted here is their ability to service this debt and manage their overall cash burn. The opportunity, if they can turn things around, is to use this capital strategically to improve their financial footing. Without more context from their other financial reports, it is hard to say if this is a smart move to survive a temporary crunch or a sign of deeper financial distress. In conclusion, IMAC Holdings Incorporated has taken on new debt in a rather expensive way. It's a move that signals immediate financial needs. Well, be keeping a close eye on their future filings to see how they manage this obligation, and if they can improve their financial health. Alright, that's our breakdown of this IMAC Holdings Incorporated filing. What's your take on this loan agreement and what it suggests for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord link in the description to join our growing community. Thanks for watching, and we'll see you next time on Corporate Decoder.